What's up, everybody? Michael Silva here. Welcome to another episode of the Daily Stock Market Brief Show. This week, it's going to be hard to navigate, as we have been talking about. Why is it going to be hard to navigate? Well, we have quarter end on Wednesday, so you happen to see a lot of rebalancing, a lot of shakeups, a lot of movement. Okay, and then on top of that, we have OPEC, and then we have on Friday, we have some important economic data coming out. So a lot of these shakeouts, a lot of these movements, you don't want to put too much weight on them until we get out of this week and we kind of see a little bit more clearer heading into the new week. We got a lot to talk about on today's episode, everybody, so let's just get right into it. All right, everybody, welcome back. We're going to start off here with the market dashboard. So who is the leader? Who is the lagger? It looks like small caps were the significant lagger here, and the Dow Jones indices, NASDAQ leading the way. Good news around tech stuff that did take place. We'll get into that shortly. You can see here the 11 sectors of the S&P 500. What led the way? Communication services and technology. Now, those are the biggest weight of the S&P 500. Okay, so I believe, I can't remember the percentage points, but I think they make up both to a combined around 24 to 25% of the holdings within the SPY. And then up there is utilities too. So utilities is finding a little bit of strength. So that's something to keep an eye on, as it has been a laggard this last previous week. So what drove these numbers today within the communications and technology? Well, there was some big news around the federal court saying that they tossed the antitrust suits against Facebook. And that's really good news for Facebook. As you can see here, Facebook was up 4.18%. Now, it was relatively flat throughout the day, but as soon as the announcement was made, this thing started pumping very, very hard and very, very fast. You can see the price percent oscillator did cross over to bullish here, and we're kind of getting a little bit overextended on the RSI. So something interesting to watch to see how this one plays out. Other news, we had some more news around the contagious Delta variant, and I don't know whether to put too much weight on this or not specifically the variant, but how the markets are reacting to this news. I don't know whether to put too much weight on it as of right now. So it's to be determined at this particular point in time. But as that came out, the Dow Jones US Travel and Leisure Index did not have that great of a day. A lot of those stocks individually got hit very hard. You can see here as we're pulling up to this trend line, today the Dow Jones US Travel and Leisure Index was down almost 2%, which is a big movement to the downside. If you look at individual travel and leisure stocks, I just brought up CCL because we played this breakout and we took profits up here as well on this move. If you were part of the Discord at that time, now we're starting to see it really start to get hit down to the downside. And today's news dropped at 7%, which is a very, very strong move, backed by some strong volume. I will say it is pulling into the 150-day moving average. So if this is just a shakeout, not too much weight on this specific the Delta variant, this could potentially make for a good pivot point right here, right at around $25. So it's something to maybe keep in mind if you're looking at individual names. The dollar, and also to mention, by the way, travel and leisure coming back into the summer months they could be very beneficial as the economy is opening up. So you're getting this hit on this news. Perhaps if it washes away, this could be an early reaction, and then the market recovers. So it's something to just be mindful of. The dollar, let's keep a look there. Up slightly on the day, still flagging, right? We know this inverse correlation between the dollar and the S&P 500. As the dollar falls, we see the S&P 500 rise. And, we saw this big move to the upside. It really didn't affect the S&P 500 too much. It fell 3%. And it really did have an effect on gold and the precious metals. So if we start breaking out of this, perhaps that sends precious metals down actually further. Let's look at yields and bonds really quick. You can see here the curves, the 10s and 2s, and you got the 30 and 5 here. Both broke this area of support and they've been heading lower. That was not good for the financials, but the financials are finding a little bit of a pivot point as of recently. We'll see if that strength comes back. Strength in the banks, though, you really want to see the yield continue to rise. So this is the 10-year right here. It'd be better to see this rise and a 30-year rise because banks, they lend long-term and they borrow short-term. So the higher the yields, the more margin that these banks can make. We're starting to see short-terms rise. We're starting to see these Longer term yields, they peaked right here in around March. So we'll continue to see how this develops. Right now, this could be chop, and it could be continuing to be chop. We'll see. As we see right here, this could be potential bull channel, or sorry, not a bull channel, a bull flag. We saw some strength on Friday's close. Today, it was pretty much completely reversed. So like I said, we'll just continue to have to monitor and see what develops here. If you look at the TLH, this is the 10 to 20 year bond ETF. We had that inverse head and shoulders. We hit our target. Now it's kind of floating around here. Let's see if it wants to continue pressing higher. The price percent oscillator suggests that, it might take a little bit more time to consolidate, or it's going to break down right here. So like I said, we'll continue to monitor that. A divergence to watch out for that we called out prior is the S&P 500 over the TLT. And that's this ratio right here in the lighter purple. The darker purple, or the blue, I should say, is the S&P 500. So you can see that that's making a high, and you're seeing the S&P 500 TLT ratio here making a low. And sometimes when this takes place, you need to be very mindful of it because of the fact these divergences can lead to the S&P 500 falling lower. And we saw that in the previous divergence to this point and this point, and we saw the S&P 500 correct down there about 3%. The last one that I went over yesterday was the SPIP over the GOVT. So we're looking at TIPS over Treasury bonds, and this is the, if this falls further or breaks down through this channel, that's, the market telling you, okay, they're believing the transitory narrative. Right now, it's kind of just hitting this area of resistance. If we start breaking above that, the price percent oscillator suggests that we can start breaking above that. That would be more inflationary pressures is how I would read that, and a reflation trade would probably come back into play. So I'm keeping a very close eye on this as the days and weeks progress. The S&P 500, let's hop right into it. All-time closing high. You can see here, matching up with the seasonality script going into July. We'll see here if we get some sort of shakeup going into the month close. Sometimes that happens during quarter closes, so we'll see. Price percent oscillator flipped over. We talked about that yesterday. So everything here is pretty bullish. Let's drill down though into the 15-minute time frame. We're getting a little bit frothy here. It's a little bit overextended. You don't want to buy at these peaks. If we gap up tomorrow, chances are we'll see people sell into that. Why? It's because it's already overextended. So what you would like to, what you should do is look for pullbacks, and then you buy on strength when it breaks above. So for example, if we pull down, okay, and then perhaps we go pull down and then we bounce and then we pull down a little bit more, you'd want to buy when it gets back above that pullback on an inclining 5-day moving average, which is this right here, which it is inclining. So you want to just be patient. You don't want to go necessarily go short. You can get lucky, and it could pull down to certain areas, but it's just a little bit harder to navigate shorting the market. If you have if you're experienced with that, by all means, you can definitely hedge short at these positions, especially on gap ups. Now, the BP-SPX chart does suggest that we can continue to press higher. We were oversold. We corrected out of that, so we're no longer oversold. The reading's right at around 68%, which means 68% of the stocks in the S&P 500 are on buy signals based off of these point and figure charts. So we'll continue to watch this. This could very well turn back right around and start heading lower, and potentially it could create a positive divergence. So we'll watch that. The sell signal did cross over, but it was a false signal here. It could be an early warning signal, but we'll watch that. As you can see, the S&P 500 pressed all-time highs. This was about to cross over. It basically did, and then the very next day it reverted. So I didn't even want to bother showing it just because it was a false signal. So we'll continue to watch to see if it crosses back through 0.8. That would, and I wouldn't imagine like being so extended right now. It's very strong possibility that we get a shoot up here on the CPC tomorrow, and this potentially starts moving back up above 0.8, and then the market takes a little bit of a rest. But like I said, it's a very difficult market to navigate as of right now. Another divergence is the NIAD. We're looking at advanced declines. This is weird. So S&P 500 pushed really high, and this is a low reading for an all-time high. You can see clearly the advanced decline issues. The NIAD here is making lower lows, and the S&P 500 is making higher highs. So very weird. If you look at the NIMOT, this is the Nisey-McClellan oscillator. This right here had that negative divergence we talked about, and then we cracked through the trend line. We came back to back test, and now we're seeing a little bit of weakness. This turned back around. Perhaps that's a back test, then we head lower. maybe, or perhaps we just, kind of drift higher. That's totally possible. I wouldn't be concerned unless if we start taking out this low, because that would suggest that we had a higher high, right? But then we had a low, and then we had a lower high, then a lower low, which could represent an early shift in trend, okay? If to change a trend, you need to first put in a lower high, and you need to put in a lower low. That's how it starts. The NIMO, also all-time high for the the S&P 500. Horrible breath. Not much to say there. So just very weird price action. Same thing with the S&P 500% of stocks above the 50-day moving average. That, it's slightly up on the day, but it's still diverging and it's relatively low. You would want to see this spike up to, assist and give you more confidence in the move that we saw today, but we didn't get that. The NASDAQ reached an all-time high. This thing is just screaming. Now, what sectors are performing very well? Well, the renewable did very, very well. So like ETFs like TAN or ICLN, I think it is, Clean Energy. I can't remember the ETF. Those did really well. And then semiconductors, and we'll talk about semis here soon. But first off, just take note, this could be very well, it's getting overextended. We don't get there that often, and the times that we do, you typically receive retracements. You don't want to chase this price action. Yes, it could continue to go up, but just be mindful that there's more risk going long here than there is upside reward. So you typically want to see pullbacks. Now, if you look at the cues on the 15-minute time frame, we saw this bullish type pattern on the inclining 5-day, and this is now more of a bearish looking pattern. You have a negative divergence and a rising wedge. So perhaps we break down through that, we fill this gap, and that could present itself as a potential buying opportunity if we, bounce, boom, boom, and then we clear this high right there and we start heading higher. So that would be something to watch. One thing to also note, we talked about the BPNDX. We said that this basically is just showing that there's still room to go higher. Now this is getting to an extended level. 77% of the stocks are on buy signals. Based off of point and figure charts in the NASDAQ 100. This is the RSI. The RSI still has room to go higher, so that is always a possibility. Meanwhile, what's doing very well is the semiconductor, so let's talk about that. They broke out of this ascending triangle. This is a very strong move, so let's see here if we get some continued strength and then it pull back to the back test and then move. Part of me thinks that a lot of these, now I don't do DMARC signals all too often, but I do watch traders that use DMARC signals, and every once in a while, I'll try to layer them on. But there are a lot of, like the NASDAQ, I believe, or the Qs, is going to be printing it's called like a 13 cell sequential cell or something like that. And we're seeing a lot of ETFs, a lot of indices starting to print these sell signals, so to speak. Now, the semiconductors, this is a very, very strong move. It broke out. We saw some increased volume, so that's good. But if we break it down to the 15-minute time frame, you can see here, the RSI is diverging. We didn't put in that all-time high, but you can see there's a significant move, like divergence. So if we continue to press higher, that will be a divergence. And you can just see the vertical nature of this move. All right. This, you don't want to go long here. You want this to take a breath. Now, what would that look like? Well, potentially we come back all the way down and fill this gap. Maybe we don't reach down to those levels, but start looking for pullbacks and then you buy back on strength. So like I said, if it pulls back, we bounce and then we head lower potentially, and then it comes back and then cracks through that high. Those are the entry points to give you, more wind at your back, so to speak, as you're trading. Dow Jones, this was the laggard today. You can see here, price percent oscillator has not crossed over to bullish. Definitely looks like it wants to, and it didn't do any structural damage by any means today. We're still above the 5-day. We're right there at the 20, above the 50, above the 100, and above the 200. So I'm not reading too much into that one. As far as the 15-minute time frame goes, look at this. The rising wedge that we talked about yesterday, it cracked down. Now look at, okay, so this is what I mean. It pulled down. The 5-day moving average is inclining. Okay, so we pulled down, we bounced up, we came here, and then we're trying to crack through this level here. So perhaps if we see strength, that is the strength that you can potentially buy into. If that makes sense, right? So 343, if we start getting above that, now I don't know if the market's going to gap up way high. If that's the case, then I don't really like chasing that. But if we start getting above 343, that could present itself as a good opportunity to potentially catch a move to 345. You can have a stop loss right at around 342. That to me makes sense. Now, if you look at the transports, this is getting a little sketchy, right? We had this just consolidating. It was building higher lows. Things were looking good. As soon as it cracked down, huge weakness. This could be due, in fact, because of the variant news. We'll see. The 5-day moving average is now slightly declining, so it's still not really representing a good buy signal, and this could be very well a potential bear flag. So that's also something to just be mindful of going into the days ahead. Transports over the S&P 500 here, you can see this too as well. They're continuing to diverge. This is important to watch. Divergences can take a long time, right, to come to fruition, and they might even resolve themselves. But I will point out a point in time, I can point out many points in times that when the transports start heading lower like this for now a couple of months, but yet the S&P 500 is printing all-time highs, that, like I said, you can go back throughout history and you can look at multiple times as this happened, and the S&P 500 then shortly thereafter retraced a little bit or consolidated a longer period. If you look at the transports over the S&P 500 back before the pandemic, you can see here in early 2020 the transports peaked, and then they started heading lower, putting in a lower high. So you saw that divergence play out as the S&P 500 was also printing another high. This all reeks of this previous 2020. The only thing that didn't, that is very far off is from a yield perspective. We had yield curve inversions take place, prior to 2020, and it gave somewhat of a signal warning. Obviously, we don't know if the pandemic crash was because of the yields, where you look at that as obviously it was the pandemic, but we don't know also if that yield curve inversion, if that will bring on a future recession or more recent coming recession because of that yield curve inversion. Most yield curve inversions, actually, I believe actually all of the yield curve inversions always led to a recession down the line shortly thereafter. So we don't know necessarily if that was, the pandemic and now we got to see if the next yield curve inversion comes. We don't know that. It's way too hard to say, and there's been all kinds of different monetary policies put into place and a record money printing, right? All new debt. So it is a whole different time. Very hard to navigate. Let's look at the Russell 2000, taking a little bit of a breath here, still above the 20-day, 50-day, 100, 200, consolidating still, hasn't broke out to the upside. This to me doesn't look bad, but I'm still being patient to see if something does progress forward here. If you look at the IWM on the 15-minute time frame, what did we talk about? We talked about, okay, it was getting overextended. Now it's time to see if we can pull back a little bit. Now, guess what? This is where it gets interesting. So I put up some lines here just to give you more of an idea of what I mean by, how to buy into strength. So first off, 5-day moving average, starting to incline right here, okay? We came up here. That's not really where you want to buy. You want to see it pull back. Okay, it bounced from here, bounced, got resistance, and now we're starting to get above. So what is something that you can do if you're an a short-term trader or a swing trader potentially? Well, you might be able to buy just right above 231. Don't chase gaps. If it gaps up to 233, you don't really just chase that, unfortunately, right? You want to see what the market wants to do throughout the day, right? Give it some time to breathe and to relax before making up that decision. But say if it just opens up kind of where it's at. Let's give that example, okay? And it goes sideways and then starts breaking above. That right there to me shows that we saw weakness. Okay, we crossed below the 5-day moving average, but we saw some strength. Then you can potentially enter into that on strength, and then you can set 2 stop losses if you want. You can set, it doesn't. Trading is typically now free across the board, except for various brokerages still charge the better brokerages like Lightspeed, right? But if you're using like Webull or many of the other verities that have brokerage firms that have free trading, you can set 2 stop losses and not need to worry about it, right? So you can put one under this swing low, okay? You can do a 50% stop there, and then under this swing low. Or you can do, if you want to give it more space, you can just keep it 100% down here. But that's the thing. So but you buy on strength, maybe it comes up, comes back a little bit, whatever, it tries to find its legs. But you got to understand from this entry point to this stop, and if your target is right here, this previous swing high to potentially higher, you're risking 1 to potentially earn 2.5 to 3 right here. And if you give it more room, then obviously it's more of a 1-for-1 sort of right here if you're just targeting this high, but you are buying on strength. So that's just a quick example of how I would personally be looking at this specific chart and specific setup. Now the BKX, and by the way, you don't need to take my word as the holy grail. That's, it's not. Everyone has a different trading strategy. I'm just sharing with you an opinion that I use, right? I like to buy on strength, Very, very rarely will I buy deep pullbacks unless it's for long-term accounts. Then it's a little bit different for me, and I have different strategies for that. BKX, we had a rising wedge. What do you know? We gapped down through it, and it headed lower, and now it's consolidating. This could be very well a bear flag. So just be mindful of that, but it's above the 5-day moving average. It is inclining 5-day moving average, so that is also something to just be mindful of. If yields want to continue to press higher, then I think that this could have some more legs, but right now it is coming down from this decline right here. So it's still trying to digest this big move. This move from down here, this was right around the monthly 5 EMA. Okay, we talked about that, and it bounced up, saw some strength. Now we're seeing a little bit of weakness here, digesting this big move. I wouldn't be surprised if it heads down a little bit lower and then bounces around some more. That would be totally fine. So you just got to give this one time. All right, everybody, that's all I got for you on today's episode. I wanted to walk through some trade ideas and trade plans, show you some various stocks. Overall, like I've been saying, going to be a hard week to navigate. There's a lot of things going on. We don't know what the market's going to do, and everybody has an opinion for what the market is going to do. But what's most important in all of this is to watch price and to watch volume, because the market's made up of multiple opinions, okay? It's all kinds of opinions. It doesn't matter what one person really says. What matters is if you follow that price, all right? If you want to go against the grain and potentially catch, a less probable trade, but if you catch it, you might be very, very lucky and you might swing, really big. I'm not that type of trader. I like to follow a trend, and I like to buy on strength, all right? So that's all I got for you on today's episode, everybody. See you later.